Greetings, members one and all of the Salivation Nation. We're going to take a look at an article here from the Wall Street Journal. I'm going to make some observations about not only the content of the article, but how it's categorized here on the website. It's under markets and commodities. And the other observation I'll make before we really get into this is why, what exactly is more appealing about precious metals and to who? So let's explore this topic. Yes, indeed, you can see here from the top tickers that the Dow Jones Industrial Average, the S&P, the NASDAQ are all up slightly a little bit here. Crude oil is up. The euro is up a little bit. And the U.S. 10-year Treasury yield is down. And I think that's kind of the what the sentiment of what this article talks about, even though the article itself is over a couple of weeks, over a half month old now. And so I think this is going to be quite interesting, and I think this does sort of play, and by the way, precious metals are up slightly as well. And this is, I think, part of the reason why we're seeing some movements and why we're seeing some of the movements we are in gold and silver. Unlike stocks and bonds, precious metals don't give investors any income simply for holding them. But what do they mean by holding them? So why were they among the market's best performers in the third quarter? The reason, in a world of falling or outright negative yields, nervous investors seeking havens are less likely to miss out on returns from bonds if they put money into gold or silver. That eliminates the major trade-off that typically confronts those interested in owning gold. It offers no yield at all. That declining opportunity cost is why trillions of dollars of negative yielding debt around the world and sharp declines in treasury yields in the U.S. have sparked a rally in precious metals. The price of silver rose 11% in the third quarter, while platinum rallied 6%. Gold advanced 4% in the quarter and is now up 15% for the year, headed towards its biggest annual gain since 2010. The sudden allure of precious metals highlights the turbulence of this year's third quarter, in which stocks, bonds, and other assets swung wildly as investors weighed the latest developments in the U.S.-China trade war. Stocks recovered from a turbulent August to creep back towards records in September, while bond yields, which moved inversely to prices, stabilized after approaching record lows earlier this month. And I think those yields, are still kind of weighing down on the markets, because since this article was written, well, we have a tentative deal with China on trade, and at breaking today, we have a tentative deal on Brexit. And with the European Union, who I think are meeting either today or tomorrow. And by the way, today is October the 17th. It's a Thursday, and tomorrow is Friday. And the European Parliament, the British Parliament, the UK Parliament will meet on Saturday. And so it's up in the air, but there's at least some hope before the August 31st hard deadline for the United Kingdom to leave the European Union. But you know what? Trade and Brexit may not have as big of an effect if they're still concerned that a recession or economic downturn could be coming, notwithstanding with these bond yields. So we'll explore that a bit here. Precious metals pared much of their third quarter advance late in the period as the dollar rose, making commodities denominated in the U.S. currency more expensive for overseas buyers. Still, the surge in metals prices has spilled over to exchange-traded funds. And there you go, that's it. That's the key here. Exchange-traded funds that track the sectors such as SPDR Gold Trust and iShares Silver Trust. And lifted shares of producers, many of which logged double-digit percentage gains for the quarter. The VanEck Vectors Gold Miners ETF advanced about 4.5% for the quarter to bring its advance for the past year to 44%, while Barrick Gold Corporation logged a 10% quarterly gain, and First Majestic Silver Corporation rallied 16%. ETFs and shares of producers are the main ways many investors can gain exposure to the sector, since they are less complex than trading commodity futures. So there's and that's another thing in the quote paper markets, electronic markets. There's futures. So these ETFs in a way. So what the Wall Street Journal here is saying is that this article essentially was written for not most of us here in this community, but for safety-seeking investors, and that's just it. And I think that really is why I am so remiss on using the word investor in terms of silver and gold, because they don't pay dividends. I don't see them as investments. They are safe havens. So what this does is this gives investors, when they're scared, they can move their money into these ETFs very quickly and easily to provide some stability, a safe haven during the down times, or make some money as an investment in those particular vehicles. But the metal itself that we hold is not really an investment, and I think it would be foolish to hold it as an investment in the physical form because of the premiums you pay, and which basically you take that and you can equate it to transaction fees for the ETFs. More likely you're going to pay more over spot for an ounce of silver in your possession than that trading fee buying 100 ounces in shares. I don't know. I don't have any experience with the exchange traded funds or futures. I've never dabbled in it, so I wouldn't know. To me, having that physical silver in your hand is key. And it's key because it's the ultimate preserver and protector of your wealth. You have control over it, and it's represented by the space it takes up and the density and the air it occupies. So with the exchange traded funds, there's some unknowns, or there's some concerns there. But for those who dabble in that arena, well, it makes perfect sense. And again, I have no problems with people that do that, or no issues, or no concerns, and think it's a good way to diversify in that world. I just don't dabble in that world that much. And so, therefore, to me, there's something about having physical silver and physical gold that I think will be an ultimate protector. And it's not as liquid, by the way. People think, well, hey, you've got the physical there, you can just go sell it anywhere. Well, not necessarily. It's not as easy as some people make it out to be, especially if you want to get the most for it. You got to kind of shop around who's going to give you the most for it. And by the way, the most might just be spot. There's places that I know of that won't give you full spot price for an ounce of gold, much less an ounce of silver. So, there is a difference between the bid price and ask price. But there you have it. It is interesting and it is fascinating. But I think that the reason why I think this title is important, why precious metals have become more appealing in this world, which is not a world that you and I really dabble in a whole lot as physical holders of gold and silver, though some of us do, and I acknowledge those who do invest in the markets and have stocks and bonds and the like. But to see it make an attractive a move in this world, and we've seen it in a different chart, in a different video that I talked about it especially, will soon, if it's done enough and for long enough, it will translate to the physical. In other words, I think that it won't be long if this trend continues where we will start to see a demand of the physical silver bullion, coins, round bars, and people's stacks growing, new stackers coming on board. There are several members of the community that have joined us here on this channel that have said they were new to accumulating gold and silver, especially silver. They were new to silver. And I welcome them all. I applaud every single one, because the more people that hold this precious metal, or these precious metals, gold and silver, I believe that's more empowering to the people at large, to take more, and they're not held hostage by the grips of really the Federal Reserve and what they do with interest rates and how they manipulate the economy as a whole in that regard. And it frees them from that. It is a liberating thing, in my view, to hold gold and silver in the physical. However, for those of you in the stock market, and for those of you in the markets who hold silver even in the physical, or gold in the physical, and then you do accumulate more in the electronic markets it's still empowering. It's still, you're buying representations of silver, and I think there's something to be said for that. As to how much of that that market's not really been tested as to cashing it out, but most of those people will either trade back in for other stocks when the time is right, when it becomes appealing to move in the other direction, or they will cash out. One of those two options. More than likely, they're not going to get silver traded out directly from those. And I don't even know if you can or not. I don't even know if that's even possible. But regardless, an interesting and fascinating article, and I think especially fascinating considering how much where this has been categorized under commodities, when silver and gold, even though they are seen as commodities, especially silver more so nowadays than ever, it is money, and it is a hedge and the ultimate safe haven there. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching, and encourage you to please rate, share this video, and if you don't see notifications for any of my videos, or it doesn't show up on your subscription feed, it could be that YouTube may have kicked you off the subscription list. So just pop back on if you don't see a video from me in a couple days or what have you. Just go to my YouTube channel and look for new videos there. I post every day. So there you have it. And again, a multitude of gratitude to you all for watching, and I encourage you to please rate, share, and subscribe.